Andrew Leyland of Thomson Reuters GFMS is with me now. Andrew produced the 24th edition of the World Silver Survey on behalf of the Silver Institute. The findings were released earlier this morning. Andrew, good to have you on the show.
Thank you. Good to be here.
Now, Andrew, one of the key findings which you discussed this morning was that silver demand rose by 13%. This is an all-time high. Let's talk about some of those findings.
Yeah, and really the all-time high in demand is down to one thing, and that's the big price correction that we saw last year. Prices on average were down 23.6% last year, and that's really prompted a turnaround in some of these markets which have been declining for some time. One of the most interesting things there, the jewelry market, up 10% year on year, and quite a big move in the silverware market as well, up 12% year on year. And that's really with prices coming down, people can afford to purchase more silver and more silver content in their jewelry and silverware, and we're starting to see a bit of a move away from plated silver products as well.
What's interesting, Andrew, is that silver scrap levels actually dropped to the lowest level since 2001, dropping 24%. But on the other side, we saw silver mine production increase 3.4%. That's what you found. So is this what's offsetting the silver price? Because the drop in silver scrap should have been a bullish factor for silver.
It should have been, but really I think the defining factors for the silver price last year were a change in investor sentiment. Silver has a huge over-the-counter investment market, and that's really what changed the direction of the price, along with gold, with a move into equities, into yielding asset classes, and away from hard assets such as gold and silver. Gold probably suffered more than silver, but with silver there, it was really the investor sentiment that caused the price decline, which then led to less incentive for people to put scrap supply into the market.
Many people I've been interviewing are scratching their heads wondering as to why silver hasn't been catching up here lately. Do you have any insight here?
Well, silver is often said to have a bit of a duality because it's part industrial metal and part investment product. And last year it really got hammered on both sides. So if we look at what happened on the investment side, we can see that on average gold prices declined 15%. And on the industrial side, the bellwether of that, copper, declined by 8% last year. Silver got hit on both sides and declined 24%.
So, Andrew, what's your forecast for the rest of the year for the metal?
For 2014, our full-year forecast is $19 per ounce. And that's a little bit lower than where we are today, and implies a little bit of a decline throughout the rest of the year. Again, that's not really... We think the fundamental factors are still pretty good for silver. We think it will still be in deficit. There'll still be a recovery in demand in jewelry, recovery in silverware, in some industrial applications, and a continuing decline in the scrap market. Now you'd say, well, that all sounds pretty bullish. But at the same time, we still think there's further to go on investors getting out of the market, unfortunately. And that's really going to see, we expect general economic improvement throughout the course of the year, a recovery in equity markets, a stronger US dollar, and this, again, helps lead to people wanting to put their money into yielding asset classes, into the bond market, into equities, hopefully mining companies, shares, but it does lead to a fall in demand and a fall in price for silver.
Andrew, thank you so much for your thoughts today.
Thank you.
And thanks for watching this edition of Kitco News. You can email us at newsfeedback@kitco.com. Thanks for watching.